Okay, welcome. Today is the 18th of October 2017. It's 9 minutes past 12 local time. I would like to give an overview first. So this is a euro dollar on the 4-hour chart. Now trading at 1.17443. As expected, it came down because all those dumb money traders tried to buy euro dollar. But I would like to also analyze some fundamentals. So what happened in the last time is that the US data became somewhat worse, while the UK data became somewhat better. Obviously, the big topic which is now dominating cable is Brexit and respective negotiations. So after we had this comment last week that the Brexit transition period could even go over 2 years, cable came up a lot, took out the stops on the upside, but now it came off again, also because dumb money traders tried to buy it. Now the situation seems to be the following. Obviously it's in the interest of both parties, the EU as well as the UK, to settle the situation. At the moment, the exit payment doesn't seem to be the main topic, whether it's 30 billion or 40 billion. And after the initial period where both sides try to show strength, it seems clear now that, also looking at the tone chosen by Theresa May during her last speech, that both parties try to settle Brexit in the best way possible. And that unexpected comment last week, whether it was actually founded or not, that the transition period could be as long as 2 years, also shows that also the European side negotiates and wants to come to a resolution. Now, this information, together with the fact that the last US data items have been somewhat worse than expected, and the last UK items also today were somewhat better, as well as the fact that Trump in the US seems to disappoint, so the hype around him gets lower and lower, and also the economic data doesn't really improve much anymore at this point in time. And also looking at other European issues such as Catalonia and their quest for independence from Spain. And also looking at other factors such as that the November hike from the Bank of England is already priced in. The following situation is interesting. So cable at this point has some longies still in the way and stops below, so even though it could come off a bit more in the short term, we are looking at euro pound, right? So euro pound will most likely go up and take out these counter stops here, also to take out the shorties which are currently in the way. But once this has happened, so around the 0.895 level, this could be a very nice short entry. So the reason being that we have different stop accumulations on the lower side, and once the counter side is cleaned, they can go down, maybe all the way up down here. We're talking obviously about a longer time period, maybe a few weeks even. But it could be accelerated if there are comments that Brexit will work out in a more smooth manner than expected. So that means that we place a limit to short euro pound up here. We can also add some shorts at market when the price comes a bit higher. But this is basically the situation. So obviously for euro pound to then come down, we would need either euro dollar to come down further or cable to do a move up, or both in the best scenario. And it's also clear that in the best scenario we will have more dumb money buyers in euro dollar, so euro dollar takes out all these stops down here, and some short traders in cable. So if cable hovers around these levels and dumb money switches to the short side, so creating support for the price, that would be a very good situation once those counter stops in euro pound itself were taken out. So this is basically the scenario. Remember that the smart money algos always incorporate the so-called plausibility principle. So they try to follow the economic logic, or they try to make it seem like there is some economic causality in the markets. However, they do so only depending on where the dumb money positions are placed and the stops, as it should be clear by now. So this is always the framework they use. So what's the maximum economic plausibility we can create and confirm, given that the dumb money was lured on the wrong side or the stops are to be hunted. And as stated, fundamentally, after this rough period initially where the Brexit negotiations started and got kind of stuck, and we have now every day still politicians negotiating behind the curtains several hours per day, it now looks like there is reason to believe that the situation will improve, and respective comments also can be expected. So rather positive comments. We had the first taste last week, and looking at the macroeconomic situation as well, the interest rates, economic data, the political situation, etc. We have a nice combination of all these factors. So that's the reason why I place some limits to short euro pound. And I may also do some smaller trades short at market.